Hey guys, it's Ruben Dante, and today is one of my first days that I'll be doing kind of live in the market trading. Part of this is kind of picking up from yesterday, so if you guys follow me, you guys know that I love trading options. My primary go-to, and if you've seen my tutorials, you've seen Interactive Brokers. So today I was kind of having a crappy day personally, but I have had a great day trading. So one of the great things about trading is, I guess, that if you don't have a great day, at least you're making a couple of thousand or hundred or whatever for it while you stayed at home and moat. No, I'm just kidding. But all jokes aside, so I think I went over my original Starbucks trade. I got in. I think I showed it on Interactive Brokers. I got into my position when Starbucks was around $47, and I had bought a target call at 55. So for those of you who kind of know my channel, you know that I know price action pretty well. I'm a big, like I think I've mentioned this, I'm a big follower of like Sam Sidon, so I know supply and demand quite well. So whenever Starbucks was at 47 something dollars, I had anticipated Starbucks to. Wait, I gotta cover up my live positions. And since I anticipated Starbucks to go to 57, and actually I have receipts, so I'll put in the chat probably a little later when I was telling people that I'm pretty sure it was to come to 57 by today's expiration, for September 21st, which is not so much magic. I think when we'll see you can't time the market. I think you can time it with a strong degree of accuracy. So I think if you can see here, I had originally gone in at 47.37, and then I think if we go back in time here on the daily time frame. Let's see. That's ZNQ. SBUX. And let me go to the daily, actually. So I'll go to the daily time frame. And when it comes to 27.47, I realized that it was kind of the bottom of the wick. If we go back in time, really go back in time. I noticed that the Starbucks had come down pretty deep into the 41, but it seems to have been like aftermarket or something. It just a giant wick, but it never, even on the smaller time frames, it had never really come in. So when I started going forward in time, I could see that it had danced and tested a few times around that level, and then when it finally penetrated, so I pretty much had an alert right around here. Actually, I think that is still the alert I had set. I knew I wanted to get in, but because I knew that was the price I wanted to get in, and I could see because of the previous candle that it had kind of bounced from there pretty hard, pretty heavy. I knew that if it come down, at least in my perspective, to that position, I would want to get in, expecting it to move up pretty rapidly. So I had bought a 55 call because if we go back to this candle again, this general area, I figured it would kind of break through. And I cannot go too much to supply and demand because I'm not the owner of it, and it's patented and whatnot. But I could kind of tell that it would probably, within a matter of, a couple of weeks at the best, would come back to what I thought was at least $55, in my opinion, based on the analysis I did. So I had just bought the $55 call, and because price had violently fallen so aggressively down to 47, that call at the time was like 30 cents. So if we go back here, you can see on a lot of my live positions. So I can't have you guys so much take a lot of my live trades, but you can see here that my average entry point for Starbucks, as the call was, my cost basis for 8 contracts was $360. So it was roughly like maybe 40 cents that I bought those contracts in for October. So if we're gonna go over my strategy, I kind of take my expected time of return, and then I kind of triple it in terms of buying the option. And it is now worth, those calls are worth like $2.40, I think. So, okay, so originally, I guess what I'm saying is my original $364 investment is now worth $2,100. I have already taken profit on about half of my position. So I know a lot of you guys were talking about strategy with me. And from all the things, you know, if we just talk about what we know from traders in general, is something that we tend to know is that traders tend to give up all their gains. You know, with a couple of losers. So something that I started doing, especially with a lot of my friends and students that were just getting started, is I would have them, if they're buying an option, a couple of contracts on a call or whatever, one of my personal rules, and I'm not saying you should do this, but something that I started adopting is that whenever my call is up 100%, I would dump over my position. So, for example, when my SBUX went from like 40 cents to 80, although for that one, it's a little different. Again, like I've been doing this for a long time, so I've modified a little bit of how I do things. But what I would do is, generally, if it was a position that I was kind of like not so sure about, SBUX I was pretty sure about. Every low was a higher low, so I could tell that there was buying pressure. So, but whenever I'm like about a trade, and if it's a call, when it's up 100%, I'll dump half of it. So, for example, if I have 20 shares of or 20 contracts of like SBUX, right? And it goes from 40 cents to 80 cents, like in a couple of days, I'll probably dump 10. That way the rest of the trade is free for me. And then when it retraces, and it usually does, especially when you're like a couple of months out, I'll just go back in and I'll pick up the shares. And so then that's kind of how I started day trading options, like really day trading options, because what I realized is when I was doing a lot of the contracts that I know, like for example, here we'll go back to my screen, and I'll do this on my MacBook next time, or my iMac, because I know this is harder to see, but you can see like on the smaller time frame, and a lot of times I'll go down to like the 1 minute, and I don't trade off of the 1 minute. I want to be clear about that, but I want to be able to see what the candles are doing before everyone else. So if people tend to use a 5 minute, I'd rather use the 1 minute and anticipate the move, right? But what I'm getting at is, once you kind of get to follow a stock, at least for me, I know its heartbeat pretty well. So so I can kind of tell the way it's going to move and where the price is going to go. And being that I know price action, long term, I wanted to hold SBUX for $55 anyway. So if I buy the $55 call, or the 55 strike call, and then it doubles in price, I'll kind of know when I can pick it back up, and so on and so forth. So that's just a quick update on my SBUX trade. Again, nothing I say is a buy, sell, or hold recommendation. You can always lose a lot of your assets or more in trading the financial markets. So financial literacy is important when it comes to that. So guys, hopefully that was helpful. I did say I was going to do more live in the market morning trades. So as you can see here, I exited quite a bit of my position. You can see by my realized versus unrealized, but for the day. So anyway, I hope this was helpful. Let me know in the comments below what you thought about the video, if it was helpful or not, and I will hopefully see you guys soon.